I am Susie Lee, and I'm with the W.K.Kellogg Foundation. And our mission-driven investment portfolio is designed to generate measurable, positive social outcomes alongside strong financial returns, and advancing racial equity and transforming capital markets as part of our mandate. And employee ownership promotes employee equity, a core aspect of WKKF's programmatic priorities, to ensure that parents and caregivers have stable, quality jobs to provide for their children and families. So we're really excited to dive in on a conversation today about how impact investors and capital providers all along the spectrum of impact and risk can help unlock this tremendous opportunity. So first, just a logistical note, we are going to preview 2 short films. The first is called We Own It, and it's the story of APIS and Heritage, and it was produced by the Skoll Foundation. And the second film profiles Mosaic Capital Partners and their portfolio companies, and it was produced by the Kellogg Foundation. And after these 2 screenings, there'll be about 20 minutes in total. Then we will welcome our distinguished panelists to the stage, and we will have a panel discussion. So without further ado, we're going to tee off these 2 films, and we hope you enjoy, and we'll be back soon.
Okay, so inside your envelope is a certificate and your statement. Go ahead and take that out. This top line was the balance at the beginning of the year for you. This was how many shares you have. This is what they were worth. That was your account total. That's about a 30% increase from the previous year. That's huge. You guys did that by executing on all of the work.
I think the way I see it, if you're an everyday working person in America, it's getting harder and harder to build wealth. Wage growth has not kept up with inflation. People are not able to get pensions and retirements like they used to.
The number one deciding factor of a person's longevity is the zip code that they live in. It's systemic. And I think this is what makes it particularly pervasive and hard to address and hard to deal with.
What this has created is 2 halves of America. And if you're the upper half, you're doing extremely well. But if you're not, things are getting harder and harder.
Our work really started from a place of how do you address this problem in a way that's scalable, something that can be expanded and accessible to large numbers of people, and what we see as is sustainable in a way that can grow and can continue for the long term. This is just showing an actual cash balance.
We're trying to take the tools of big finance to give more and more people opportunity to cross that chasm from one side to the other.
ESOP means Employee Stock Ownership Plan.
APIS and Heritage and the Legacy Fund is what we always say is our reimagining of entrepreneurship.
So there's stock in the company, stock certificate that says you own it, and it works like a retirement plan. You can only cash in that stock when you retire. When you work hard, the company does well, and you have more valuable stock.
Our work is meant to build wealth for workers using employee ownership.
The idea of employee ownership is to give people that chance. You come to work every single day, and because you do that, you can have a share or a stake in this business.
What we've been able to do is unlock a pool of capital from a really amazing group of investors, and we've been able to use that capital and go into the market for businesses and say, hey, to the owner, we're going to give you an opportunity to retire, to exit your business, to move on to the next stage of your life, and at the same time, give the workers at your company an opportunity and an on-ramp to build wealth the way that you were able to build wealth by being an owner of the business.
I was curious as to what that meant with the employee stock options. And when they explained it to me, to me, like I said, it offered me something for my future. Not just a job or even just a career, but something that I could count on when I retired. I mean, I'd actually have ownership in a company that could continue on for years and years. So for me, that was huge.
You just have such a different culture with your team of we're owners of this company. Every single one of us can impact the bottom line and impact our share prices. And you could have a very bright future if you do it right.
Brian Wilkie started Apex Plumbing some 40 years ago. Our sourcing team saw the business. We thought it was a great opportunity, and so we approached. And as you can imagine, we're trying to explain to Brian why employee ownership is a better outcome than selling to a competitor or selling to some faceless private equity shop. And it resonated with Brian.
You don't realize until you come back just how much I enjoyed getting to work with you guys and how proud I am of what you're doing now. When it came time for us to think about retiring and moving on selling the company, we had a lot of options. But what really sold me on working with APIS was the fact that people could continue on doing the good work that they were doing. Our reputation continues on, and to know that the company I worked for and with 40 years is just going upward and onward. I was just intrigued by the idea that the company would become employee-owned, because I'd had a number of people that had been with me over 10 years. I had one guy had been with me over 30 years. APIS, the financials mattered, but they had a higher purpose.
So our goal is bring the water down all the way over here, bring it to here. What we did here is a bypass.
We look for businesses that are good businesses. We want to hand these workers the equity in a thriving, growing asset that's going to create wealth for them. At the end of the day, that's the ultimate goal.
On a separate plan, are they not?
Yes. Instead of all of the economic benefits going to one person, to one family, now all the economic benefits are shared among every single person who is helping to bring the company profits. We believe that if you can get every single person to be an owner, to feel like an owner, you'll see your retention fall, you'll see productivity rise, you'll see ideas happen. That's what's so powerful for us.
Since the transition, what I think has changed more than anything is the culture here at Accent Landscape. You're not just clocking in and clocking out. Since the transition, everybody is more accountable. Everybody actually now starts to feel that they own a piece of the company and that their voice counts in here.
The statistics show that worker-owned businesses with proper ownership culture grow faster. What's fascinating to us, especially as a credit fund, is that in bad times, they're significantly less likely to go out of business and significantly less likely to lay off workers.
Stitching looks okay, starting to get worn. You know, here's the big thing, it's like I said, when you're in a shackle and you're doing a thing, so once that starts to move inside that shackle, that little bit of movement, that's burning that fiber. That'll melt that fiber.
What we see ourselves as doing is we are helping to de-risk investments in employee-owned companies in a way that will bring more capital into the market, impact as many workers as possible, but then across the economy, bring down the cost of creating employee ownership. All in favor of accepting the CEO report and moving it into the record, say aye.
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 If you're a business and you're 100% employee owned, the federal government wants this to happen. And so you do not pay federal and state taxes. And so all of that cash flow can now be used to reinvest in the business. You could pay down debt, you could train workers, you can invest in a new factory, new equipment, you could do anything you can to grow. And now you have the most powerful thing in America, a business that is 100% employee owned, 100% employee governed, and 100% debt free.
Apex Plumbing had pursued a huge contract with Denver Water.
Apex had pursued that contract over and over and over again and lost and been unsuccessful several years in a row. Employee ownership invigorated the company with a new spirit. We said, hey, this contract is something we can win, but we have to do it together. and for the first time, Apex won. And that contract has transformed the company.
Your share price went up 42%. That's amazing. So give it up for yourselves. That's freaking incredible.
Three million businesses in America will need to transition because of aging baby boomers. And it represents $10 trillion in assets that need to change hands. That is the greatest opportunity of our lifetimes.
All right, we're gonna do 3 photos, all right? Smile, show your teeth, show your grill.
We're trying to take a moment and make sure that it's not just a moment, but a movement. And it looks like that's really happening.
If we can get the stories out there, if we can show the proof points, then it'll be our time. And there's nothing like an idea whose time has come.
Having a family, 2 young kids, I have a little boy and a little girl. So it's great to have ownership, to be able to stand for that and come home knowing that I have ownership in this company, knowing that when we grow, that it's going to be better for them and for us as a whole. I'm Dustin Selzer. I've been with Zero Waste for about 10 or plus years. I've been in the industry since 2005. I'm the plant manager here, so I kind of just keep the show rolling inside and out. It's great here. It's corporate, but it's laid back. I mean, we kind of let the employees, especially after the ESOP, everybody really kind of got on board and feels like they got a piece of the pie. So, I mean, I don't have much turnover at all, which is great. Before the ESOP, there was a little more turnover, it seems like, but now it's awesome. I've kept the same employees for a long time, and everybody gets the job done.
When we were considering bringing on a partner to help us grow, raise some extra capital, and do some expansion, I had never heard of an ESOP at that time, and we loved the idea of letting our truck drivers, our forklift operators, our hourly employees, let them have a retirement plan, let them have an opportunity to take ownership, real ownership in the company that they work for.
It's exciting, it's challenging, it's hard in the early days as like one of the first movers and the various sort of headwinds that come with that, but it's very rewarding to help families that, you know, maybe have no savings, live paycheck to paycheck, and to create a meaningful, you know, wealth creation event for them that changes, you know, we think about it as it breaks generational cycles of poverty for families. Because at the end of the day, we have a wealth inequality issue in our society, and when we started in 2013 versus today, it hasn't gotten better.
Investments in employee ownership and worker cooperatives and communities can help families build their own generational wealth. Because right now, what we see is that in order to get affordable 2-bedroom apartment, you have to be making at least $28 an hour. So you got people who are, you know, working and they make $15 an hour, right? So that's just rent, right? So what you have is you have to have 2 people working full-time jobs and 1 person with a side hustle to meet the rest of your obligations, right? What we believe is that these models help families begin to build their own generational wealth and live a good quality of life that they deserve, and an environment where children can thrive.
Given our focus on systems and supporting innovations that make systems more equitable, ESOPs are a part of that. We've known about them and we've seen a myriad of examples, and Mosaic was one of those who had a track record of doing this, could point to a portfolio of companies, and yet had an approach that was different than what was coming out in other innovations.
Our strategy from day one was to try to combine what we think are the best aspects of traditional private equity investing strategies with the really unique dynamic benefits of being employee-owned.
You know, folks have used this term silver tsunami. It's 100% accurate. You have tons of baby boomers that are entering retirement or will be, and you know, the kids and the grandkids don't want to run the business. There's lots of great companies that are privately held that will change hands. And if we don't put capital next to ESOPs, they will all go to strategics and private equity. And that will have the impact that those buyers tend to have to those businesses.
Our simple question or value proposition that we give to owners of these businesses is, geez, if we can offer you a competitive transaction with other folks that will offer to buy your business, if we can be competitive and offer you something that's very similar, why wouldn't you want to sell it to your employees?
An ESOP, we grant shares to all employees every year, and then as our share price continues to increase, the value of their shares goes up.
As we've seen the value go up, has become more and more exciting because it's really given us flexibility as employees, as you know, a family, my family, to be able to make financial decisions that we might have not have been able to make before, just due to having that extra, almost like investment arm.
Recruiting wise, it's helped because we can show people the actual results of the ESOP and how much money people have in their accounts already. The high end right now is over $500,000. That's pretty good return on zero investment from the person, right? Other than doing great work.
Every time we close a new ESOP investment, the trustee does a rollout meeting. We typically attend, and there's a lot of emotion there, which is really cool. You know, you see people, blue collar workers that typically are not invited to meetings about what's going on with the company, and they get to be told that they are now employee owners and they get to share in the wealth creation of the business going forward. And just to see the facial expressions, the emotions, the reaction is very special. It's probably one of the most meaningful parts of this job.
What Mosaic was able to do is break it down in very simple terms. They have the expertise in order to guide us through that process. Without their knowledge of having been there, done that before, so to speak, they quickly got us comfortable with the idea. It was something that we felt as a team we wanted to do, because we can impact a lot more folks' lives if we offer this to all of our employees versus just a select few at the top.
In terms of impact, I think when we see evidence that employee ownership is really driving better business performance, that is proof that this model works. And then the more important part is around the wealth creation. I mean, it is extraordinary in terms of having a nest egg, having equity in the company that they are building, and being able to do things that otherwise an hourly wage job would not enable them to provide for themselves and their families in that way.
The work that we do, it can be dirty. It could be considered one of those dirty jobs. So transitioning to the ESOP, I think, made a big impact on folks that want to be here and want to do that work.
I'm proud of what I do because I take ownership of what I do, no matter what it is. No matter what I'm assigned with, I try to do my very best and have it reflect well on the company and myself.
If the business community and the investor community truly want to align themselves with what's best for their company and what's best for their communities, ESOPs are a no-brainer.
Oh, it's great. I mean, you feel like you're part of something more than just a number at a company. So, I mean, you work harder, you want to grow the company so that you grow at the end of the day too, and be able to provide more for your family. I mean, especially for my young kids, they're going to be going to college and all the expenses that come with it. Yeah, I hope it gets us, one day to some financial freedom. I mean, that's what we're expecting, and that's as long as we can keep growing and keep going, that's what we would like to do.
Well, thank you all for being here. I hope you are all inspired by those two films and have a good grounding now on the opportunity for employee ownership. And today, we are really here to talk about the how, and how do we unlock additional capital? How do we take advantage of this $10 trillion opportunity? How can investors, whether you are a philanthropic grant maker, a commercial investor, or an impact investor, how can you engage to really tap into this opportunity and unlock wealth for workers? We want to map the capital continuum, and we want to hear from our visionaries here about what the next 10 to 15 years will look like. So I'm pleased to be joined by Keith Butcher, who is the founder and partner at Mosaic Capital Partners, Melissa Hoover, founder of Democracy at Work Institute, and now the current director of ownership culture and training at APIS and Heritage, my colleague, Dr. Jeanne Wardford, program officer for family economic security at the Kellogg Foundation, and finally, Todd Leverette, who is the founding partner of APIS and Heritage Capital Partners. Again, the Kellogg Foundation has made investments in both Mosaic and A&H, and also into Dowie. Again, the data abounds about this opportunity, and that employee-owned companies outperform their peers financially, and that there's a huge opportunity. So what is stopping us from doing more? And each of these panelists really bring expertise and knowledge. And so I want to dive right in to the first question, which is how can impact investors and philanthropy unlock the capital to fuel this ownership movement forward? And I think, Melissa, I will start with you to kick us off.
Sure. So just a little context setting. And these are not my numbers. These come from work done by Transform Finance and Ownership Capital Labs. In December 2024, there were 27 funds with $500 million of assets under management focused on or engaged with employee ownership. In 10 months since then, there are now 29 funds and $865 million focused on or engaged with employee ownership. There's been a rapid growth in the field. So that's sort of my role here, is to help you see that kind of the trend that we're on. And then I guess I'll hand it over, back
Sure,
to you,
and
Susie.
maybe, so both Keith and Todd have raised hundreds of millions of dollars into your families of funds. So Keith, why don't you kick it off here around perhaps what are the opportunities for investors here, but what have been some of the challenges? How can we better understand these bottlenecks and help the investors here in this room unlock and flow more capital into the space?
Well, thank you, everybody, for coming to our session. I think one of the challenges is just education and just understanding that this is an option. So when we started our first fund, and we rolled it out in 2014, and our thesis was we were going to go to the traditional M&A market, the mergers and acquisitions market, and we're going to compete head-to-head with every other private equity firm, except we're going to bring this, when our indication of interest comes in, it's going to look very different than everybody else's. And then they're going to come back and they're going to say, what the heck is this thing that you guys are trying to do? And we did that. Now, the problem was in that process is you have to do a lot of missionary work with the investment banks that are running those processes, because they don't understand, they don't trust, they want deals to close, they don't know you, they don't know this process, this structure. And so we've had to spend an inordinate amount of time with those groups getting trust. And I think that's the initial thing. And we just need more funds. I mean, as much as there is no competitive dynamic right now because we are just like scratching the surface. And so for our perspective, it would be very helpful if we had 5, 6, 7, 8 funds that were focused on this so that they would see multiple offers from funds like us and it would validate us. And so I think that's the big, at this stage in my career, because I'm one of the elder statesmen among the capital folks, I've been doing ESOP transactions for 20 years. Literally, I did the first transaction in 1999. And from my perspective, I just want to see us have a really rich capital base for these transactions. And that will validate and grow it.
Great, thanks, Keith. And Todd, you have recently, so A&H recently had a second closing and has raised $181 million to date on Fund 2 for A&H Capital Partners. So congratulations on that. If you could share with the audience a bit about your journey. So you're a newer fund than Mosaic, and your approach, your journey from Fund 1 to Fund 2, and what some of the, perhaps some of the roadblocks have been, and maybe investor questions or comfort level, and what is currently unlocking this momentum and how folks can continue to participate.
Definitely can. Thank you so much, Susie, and thank you, everyone. My path and our firm's path to existing and be able to raise 181 in our second fund, 58 in our first fund, is unique, and it really involves everybody on the stage. So I think to the question of what does it take to unlock, whether it's the awareness and education and training, or what does it take to unlock the capital around this model, I think part of it, so I'll tell the story, but part of it is in this story. So my work around worker ownership began, so I always tell the story. I went to studied business undergrad, went to law school, went to business school, and the first time I ever heard about ESOPs and employee ownership as some sort of tool that can help folks was working at a small nonprofit in Detroit, Michigan called the Center for Community-Based Enterprise that was founded by a couple of ESOP attorneys. I was eventually hired by Melissa at the Democracy at Work Institute that was focused on how do you create wealth building opportunities, quality job opportunities for people across the country using worker ownership. And it was there that we kind of figured out that really what was missing on the scale was the capital piece to what Keith was saying before. And this is where I think, what does it take to unlock this? We had a model, and I know this all seems very novel. Worker ownership is very old. If you're talking about employee stock ownership plans as a legal and tax and a corporate structure, I think we're at the 50-year mark. If you're talking about worker ownership, so people coming together, workers coming together to create enterprise and solve problems for their lives, we're talking like the beginning of humanity. This is the oldest idea in the world. And so we had this powerful idea. We had a powerful purpose and reason for doing it, helping folks get access to wealth building opportunities. And we had a model, so Melissa enabled us, and funding from Kellogg and enabled us to build a financial model around it. But trying to go out and raise capital and start a fund when you're not coming out of the private equity world, when you're not coming out of the investment banking world, when you're coming out of the nonprofit world is very difficult, some would say almost impossible. But it was because of partnerships with the Kellogg Foundation and Jeanne and Susie and our foundational partners that supported the work early on, both from the grant side and the program-related investment side and the mission-related investment side. We were able to do something that a lot of folks who do come out of private equity or investing banking can't do, which is raise capital to put this model out there. So I think uncommon places, finding those uncommon partners, people with uncommon backgrounds to run with this model is what's going to be necessary. And so happy to be on and we couldn't have done it. I can't even imagine what it was like when you all first came out with the model. Keith, we were able to
It wasn't fun.
Yeah, so we were able to get value from you all being out in front of us. It wasn't so new.
And I'd love to dive in on this capital spectrum and invite Jeanne to share her context and experience. So just as some context setting, and I know all of you in the room come from a whole wide spectrum of impact investment. So from philanthropic organizations that provide grant funding to impact investing to commercial investors, everyone that is approaching this from different ends of the spectrum of risk and impact. And Jeanne leads the Kellogg Foundation's work on the grant-making side to really build out ecosystems to support innovation. And Jeanne has been doing this work for many decades and really has helped seed has seeded the field of employee ownership. And
okay.
You're right.
All right,
So
all right,
please,
okay.
please.
It may feel like that, but I was thinking about it as I was watching the movie is that the first time I heard about employee ownership was in the 90s when Northwest Airlines was in trouble. And they said they were going to sell to their employees, and that's how they saved their company. And so, fast forward to my work at Kellogg, and most of you know us for our work in early childhood, because that's really our sweet spot. We care about children, and everything we do leads to an investment in children. And so worker ownership was one where the first day I got this book, Joseph Blasi had wrote, and it was like, read this, called Citizen Share. Citizen Share. And it talked about, employee ownership, talked about what the possibilities were. So he and I had many conversations, and then my question at the end of the day is that there's no research. How do we know that it really works? And so we partnered with Rutgers, and they did the research for us. Does this really work for low to moderate income employees? And the research suggests that it does. What we actually have seen is that when we're looking at this is that, when we have employee owners, they're increased to 92% increased wealth in their household and 30% increased income. And this data came from, I think, either Melissa or Allison, someone. So I'm just giving it back to you. But what we know is that, this partnership came not only with an investment, but it came with thought strategies. I remember when we were here at SOCAP, a few years ago when we were walking, almost 10 years ago, walking, along the bay saying, well, what can this look like? What possibilities are there? And so these investments, but also the thought partnerships in terms of thinking about it, like we work with Apis and Heritage. He came to me, he said, I need money. And I was like, well, okay. Right. So I said, well, maybe if I get a bunch of my friends together, we can see what we can do. So, for those of you who are seeking capital, thought partners and strategy, with foundations are sometimes even more valuable than having the actual cash for you, because it led to, their first fund closing, above what their initial projections were. And so we count that as a success. And then, along the years, we've, have supported Dowie and Rutgers and Project Equity and with Allison's, supported these efforts. Because what we know is that in 5 or 6 years, we're going to see the greatest wealth transfer in the world, okay? They're saying 124 trillion. And what we know is that there are 2.3 million businesses that are going to change hands. And we know that over half of them, at the low estimate, don't have a succession plan. And so, as Keith indicated, one of the hardest things is that people's knowledge of it. It seems very daunting. When you have a transition in your family, you don't, your lawyer or accountant says sell it to private equity, And what we're saying is, I know I'm running out of time. Okay. I see our mic go up, right? So education really is important in this because what we know is that 14% are services of businesses, 12% are retail, and then another 12% are construction. So if those businesses don't transition into some form of an employee ownership where it'll stay in communities, keep jobs in communities with employer higher wages for families, is that we're going to see a really big disruption in our ecosystem.
Great, thank you, Jeanne. And so we've seen that all kinds of capital are required to really grow this marketplace, grant funding for research, for nonprofit innovation, and then impact capital for new and first-time funds, and then commercial capital as well. I think, Mosaic, you have raised primarily commercial capital, and I think in this new fund you've had 3 or 4 impact investors come in. So we have the whole capital spectrum here, but I want to dive in on part of the challenges. We've seen, employee ownership works. ESOPs are a great structure. So what is preventing these businesses from doing more of these ESOP transactions? And maybe we'll start with you, Melissa, because you're in this culture role. So tell us about your role at A&H and just the importance of what you do and what you see with businesses.
Sure, yeah. So I'll let the finance guys talk about the finance barriers. For me, there's this real question of an enabling environment, both externally. So you can move all the money you want if you don't have the kind of policy regimes and skills and expertise to support those businesses, it's not going to be as effective. I think about what my husband says to me when I come home and dump my stuff in every room on the way in the house. And he says, to love you is to be surrounded by you. And I think about that. I think about that with employee ownership, right? So that's the external enabling environment, but there's also an internal enabling environment within the companies. So transaction-focused people think, okay, we got to the finish line, we closed the deal, we're done. And that's when my work starts, is to help de-risk that money, to help ensure that that business is going to succeed and grow. And it doesn't happen automatically. There is nothing automatic about employee ownership growing the business. It has to be a pretty intentional process. I mean, yes, there are tax breaks. Yes, there's free cash flow after the tax breaks. But unless you invest in employees understanding the asset that they own and being able to drive value in it, you're not going to see the maximum benefit. And that's not an easy thing. We're talking about people. People are hard. We're talking about people in businesses, in systems. Requires a sort of a Swiss Army knife of expertise, but it's totally doable. We do it all day, every day with other kinds of things and with other kinds of businesses. So there's just a little bit of specialized employee ownership knowledge required, but a lot of it is just business best practices, quality jobs, best practices. And what the case I want to make to this room in particular is that ownership culture should be part of the model at the fund level, but it also should be part of what investors are demanding from their funds. Every lever needs to be pulled in order for this to be a sort of comprehensive strategy.
Great, thank you, Melissa. And maybe more on the funding side, Keith and Todd, perhaps we'll start with you, Keith, just around what are some of these transactions aren't simple, right? They're complicated. What are some of the, perhaps some of the barriers or some of the intricacies that you're working on to help streamline these transactions? What's needed in the capital markets to make these transactions more fluid, more just easier for folks to execute?
I think, I'm trying to think, there's a lot of them, so it's kind of overwhelming. But I think in the ecosystem today, we're in way better shape than we were in the early 2000s. And so today we have a complete sort of ecosystem of banking and credit funds that will support these transactions, that understand them. And so if you think about, if you're doing a transaction and you need debt and equity, we provide the pseudo equity. And then we need debt providers, right, to partner with us. And so we can't do deals if we don't have banks and credit funds alongside us. And so that ecosystem has been built, and it's in really good shape. I think it's more about, and I'll beat this drum forever, because at the end of the day, if you think about the world we're talking about and this silver tsunami and all these assets that are going to change hands, there are two markets that are prepared for that. Strategic buyers are prepared for that, and the entire private equity community that is not Todd and I. They are prepared, they have their money in hand, and they are ready to go and acquire these businesses. Todd and I need billions and billions of dollars, not 800 million, to be competitive. And so that's the problem at the end of the day. And there needs to be, and think about it, I try to put in simple numbers. We did 13 transitions to employee ownership in our first fund, and we'll do another 15 in our second fund. We've done 4 so far. So that's 13 businesses. It's nothing, right? Like, we need 50 Mosaics and Apises out there, right? That's the issue right now. And I think if you have that, what happens is that to the structure process, everybody in that ecosystem of investment banks and the folks that are the gatekeepers for the majority of businesses, like, there is a huge community of mediators that are gatekeepers for all these businesses. Lower middle market investment banks, there's thousands. They're going to control most of those transitions. And so we need to have enough of us against them that they're bringing us those deals and they're introducing us to those founders, and they don't look at us as, well, that's the transactions that's more troublesome to do than this simple private equity majority buyout deal. That's going to simplify it. So more money, more money, more money.
Yeah. And
sorry, you're talking about the brokers, right?
Yeah, brokers, the broker market.
And Todd, maybe you can chime in on just what's unique. How do you win deals? What's unique about the model? How can you and Mosaic both win more of these transactions and then open up the market for other funds to come in and do the same?
Well, I think Keith said it. There needs to be more capital flowing in. And you said billions to us, but then you said something. There needs to be 50. There needs to be 100 different funds focused on. I always have this vision. Imagine a fund focused on creating employee ownership opportunities within a certain community, you know, it's Appalachia or native communities in certain parts of the U.S. that are run by people from that community. And I think that's really when you can connect the people who are deploying the capital in the communities that need the capital and need these transitions, then I think you have something that's on another level. So the capital needs to come in, yes, but thank you. The capital needs to come in, yes, but we're going to be out of market, you know, pretty soon. You all are not necessarily in market for the capital right now. I think what happened, the model that was created with Kellogg and A&H and the other funders, where we're bringing in these, and I was talking at my alma mater, Columbia Business School, a couple weeks ago with the MBA students. They're hungry for something like this. This generation of folks who are going into the business environment, they want purpose, they want meaning, they don't want to be a part of the problem. They want to be a part of the solution. So there are folks who are hungry for this, and if we give them a place to go, we give them a place to learn. I mean, if we can get some, I think there needs to be a whole just fellowship program that's rotating these kids through the different organizations, helping us deploy more and helping them learn, and then we send them out to their communities. I think that's the systemic sort of change that we need to make.
Just one point to go with that, and just about this, you asked about how do you win these deals. So here's the thing. We did 13 deals in our first fund, and I'm very confident in saying we were not the highest bidder in any one of those. If we're at the table with this type of capital and with this type of structure, founder owners of businesses will do this transaction if it's close. They will. They would love to, I mean, and by the way, if they're the type of mercenary that doesn't want to do this when presented with something similar, Todd and I don't want to put our money in there. So,
and so I would argue that you have been, and we have been the highest bidder. Maybe not when you look at the totality of what we're offering that owner. We always say, you know, imagine.
He's so much slicker than I am.
And we always have them, think about a year from now, after you sold your company. Think about what happens if you come back to your company. Or think about if you're walking around the town and you're going to church and you're going to the grocery store and you're seeing those people that worked for you for 5, 10, 15, or 20 years. What are they going to say to you? What are they going to think about? Are you going to have to move because you sold the company to some strategic or P that didn't care about them, that came in and do what not all, but a lot of those firms do, and destroyed lives while you were getting your retirement income. And so our story is, why don't you go off? You know, you need to take care of your family. You need to be able to retire. You've worked hard, but why don't you become the superhero? Become the superhero for this company and create the opportunity for someone else. And I mean, I think we're probably a partner, Michael Brownrigg, who's actually based in Burlingame, always says and reminds us that I think we're 6 out of 6 with tiers. You don't usually see a lot of tiers in M&A transactions unless things are going really wrong, really, really wrong. But getting tiers from founders who now recognize that they can do this and what it can mean for them and for their workers and for their communities, I mean, I think we have a strategic advantage in a lot of ways.
Yeah, I don't think there's any founders that shed tears when they announced they sold to BlackRock to their employees. Congrats.
Well, thank you for pointing us towards the future. These are long-term strategies, and wanted to close up our discussion with inviting each of our speakers to really share what you see, what is the vision for the next 10, 15 years from your perspective. And then we'll open it up to questions from the audience.
Well, 15 years, be vertical and fly fishing for me, personally. And this is a nuance that I'm going to throw out just because I think it's important to think about as we've gone through Fund 1 and we're almost exited out of Fund 1. One of the disappointments of being in this fund business is it is hard to stay employee owned for these companies. And as we go and we raise funds for Fund 2, and we have wonderful impact investors in our Fund 2, and all of them ask the same question. Well, you had 13 companies in Fund 1 that are ESOP owned. How many of them are going to stay ESOP owned? Complete honesty, 3. Now, that is, I hate that, but it is a reality that there's no capital market after us. And so our only way of acting as a fund and exiting and returning capital is through a sale transaction. And so unless the company has some dynamics where they can actually internally produce enough cash flow to take us out, which we're delighted there's 3 that are going to do that, and we had wonderful returns from them, and it's great. But if we have so my vision is that there is that next ecosystem of capital after us and after them, so that when I get to Fund 3, which will probably be my last fund, and Todd's just starting one of 10 for him, that there will be that capital market there for us for those funds where 13 of those companies will stay employee owned. And they'll just transition to different types of capital to sort of wind themselves out and go forward. But that's the vision I would have, is just that they would keep it. But I'm pretty pleased in life that of the 10 that won't, just the average employee balances these folks have received. We're going to create $130 million for the employee participants in Fund 1. And most of that is liquid cash in their 401k account now because they participated in the sale. And so, it's not the home run, but it's a double. If you like baseball.
I'll take it in a totally different direction for my vision. Keith's very practical. I think I'm going to do a little bit bigger, kind of a one level up. I initially thought like, oh, my vision is that everyone's aware of it and it's an option. I thought, what a boring vision. Okay, it's normalized. Okay, it's part of, it's an everyday thing. But what does that like really mean for us? And I guess I'm pretty, acutely aware of the fraying social fabric of our current moment, right? We have increasingly a K-shaped economy where some industries are doing really well and the ones that aren't are doing horribly, where some people, a very small amount of people, are doing very well and anybody who isn't is doing horribly, where our politics have bifurcated and there's no dialogue, where investment strategies are themselves bifurcated, right? There's like maximizing your investment and then, at the end of your life, maybe giving back a little bit. And for me, the power of employee ownership and the alignment of incentives that it creates is that it has the potential to reweave that social fabric. And we desperately need some reweaving of the social fabric, and not just in a sort of rhetorical way, in an I actually have skin in the game way and our interests are aligned because I'm also benefiting from this institution. So I guess that's my vision, is that we can be a force, one of many hopefully, for aligning interests and helping to reweave the social fabric before we truly reach a crisis point in our society, in our world.
I don't know how I'm going to follow all of that because they really are just sort of giving you, what the future really looks like. But I just want to bring it even more home around what Melissa said. Right now, a lot of people don't have $400 for an emergency. And having, when we look at Publix, that it's 270,000 employees, one of the largest ESOPs. And so they have cashiers with $1 million and 1.5 retirement funds. So this is something that works, and it works for all people. And so, we have to find a way to increase the knowledge, bring the 500 ESOP centers on, continue to promote the aspects of it that both sides of the aisle like, to get momentum going around this, because this is how we will save families and children.
When I think about my hopes and vision 5-10 years out from now, I have so many. I'll give you the top 20. So one, we always talk about we're one of the few kind of buyout funds, private equity style, private credit style buyout funds out there that has a theory of change as well. And so our theory of change has been with us from when we were a project at the Democracy at Work Institute. And one of the big kind of systemic pieces of our theory of change is that what we want to do is show you all, show the world, show owners, show workers, show the capital markets that these are good investments. These are really good investing in companies that have this tremendous support from the federal government through these tax benefits. And if you do it the right way, have workers that have a vested interest in the company. And there's not this war between ownership and governance and workforce, and everybody's trying to figure out how to make that company profitable because it's going to impact them. The businesses that creates, the dynamics that creates. We said it a little bit in the video, more likely to grow, faster to grow in an up economy, less likely to fall apart in the down economy. We want everybody to realize that these are good places to put your capital, safe places to put your capital when it's done the right way. When it's done the right way. And we have to beware of folks who don't want to do it the right way or who want to use the name of employee ownership and don't want to honor the spirit of what we're trying to do. So long story short, big goal is that one day we won't need niche specialty funds to go out with private capital. I'm sure private capital will always play a role and go out there and do 10 deals, 15 deals, but that the broader capital markets, your CDFI, your community bank, the institutional players in the capital markets that make things move and happen, that they'll take on this mantle in 10 or 15 years from now. I can go fly fishing with you.
You'd be welcome.
Thank you all. We've seen this beautiful vision for the next decade or so, and you all have asked a tremendous amount of questions. I understand that we do have some time to get to some of these questions, so I've sorted through them, and I'm going to pose a few of these questions, and I think our SOCAP friends will let me know when we need to stop. But question here about, in the video, and we've talked a bit about the companies primarily in construction and waste management. And can you give examples from other sectors, such as health, culinary, hospitality, high-tech, sports? Is this an opportunity for all types of companies, or perhaps what are some of the characteristics of companies that are most amenable to employee ownership?
I think so in the ESOP structure itself, there are some limitations. And so from an industry perspective, it's really how those industries are traded. So it's very hard, and I don't, maybe Todd's found a better way to do it, but we have a really hard time supporting a transaction that's over about 8 times EBITDA as a multiple. And just because there's some math that just breaks down there. And so if you think about high-flying industries like residential services right now that's trading at 12 to 15 times, we just can't be competitive. And so that's part of it. But I would say there is a broad swath of, if you look at our portfolio, we run across a lot of different industries. So we have pet hotel, we had a organic lettuce company, we've had about everything you can imagine. But once again, where we'll have an issue is if it's a super high flying, very high multiple growth monster, very difficult for us to fit in there and be competitive. I don't know what you guys have seen.
Yeah, similar story on our end, but I think that again presents an opportunity that hopefully our teams will start to figure out that there is a space in this world for what looks like more traditional equity to be able to come into some of these transactions, support those larger multiples. Our focus right now is really on what we call essential services, essential manufacturing. So part of our mission, our impact thesis, our impact mission is to help low and moderate income workers create employee ownership opportunities. So the types of companies that we were mentioning, your construction company, your landscaper, your commercial cleaning firm, your grocery store, which are all types, to answer the question, which are all types of companies that are in our pipeline. We actually, I can't tell that story yet. We haven't announced it yet. But yes, a wide swath of industry. And what's really been interesting is over the last year and a half, how many healthcare opportunities have popped up around non-medical transportation, home care. And I think what's happening is kind of word is out broadly about what happens to a lot of these businesses and business models when you get the bad actors in the traditional private equity and private debt markets in there, and what it's doing to quality of care, what it's doing. And the owners are seeing it, the workers are seeing it, and the patients are seeing it. So I think we've seen a lot of healthcare opportunities come on the market where we think we have a competitive advantage with our story. So hopefully you'll see some healthcare deals in our pipeline sometime soon. And then last thing, I heard somebody mention sports on that. So you have a lot of visions. I do imagine a player-owned NBA team or a player-owned NFL team or baseball team, and what that can mean. That's not for us right now, but if somebody else wants to figure that out, we'll be there and support it.
Great. We've had a number of questions come in from Melissa around how are you working with company leaders on cultivating that ownership mindset among employees? What's needed?
Yeah, so we have our ownership culture program is sort of a 5-stage, 5-year process. Ownership culture doesn't happen overnight, but it starts with awareness and education. So we start sort of with training for the employees about what is my ESOP, how does our company make money, how do I have a role in making money, but we don't stop there. That's just the sort of the foundational level that we need to go kind of up the chain of impact. So we also coach management on sort of what is an ownership culture, what's your role in it. We really, it's been a learning lab these past few years for us, and one of the things we realized is senior management and leadership in the company is critical. They have to be bought in or it's not gonna happen. But the real drivers of change are at the middle management and field management level. Those are the people that the workforce deals with every day. It's who determines what their day is gonna be like, feel like, what kind of information they're gonna have access to, and whether their ideas are gonna be taken seriously and implemented, which is really where we start to see value driving in the company. So then, after we sort of do coaching for management, we also roll out open book management, which sounds like, oh, everybody's gonna read all the financial statements. That's not actually true. It's a pretty rigorous system of simplifying the financials, sharing them, giving people an opportunity to give input to them, and then creating a reward out of that opportunity. Guess what happens when that reward is actually your share price? It sort of turbocharges the utility and effectiveness of open book management. We also really focus on immediate job quality. So the ESOP is a 30-year proposition, right? So yes, you can drive value in your shares and you can see that every year and all of that. But if the job doesn't feel different to you pretty quickly after the transaction happens, and by feel different, I mean, the way in which you work, but also, also making sure that your total compensation package actually meets your needs. What you can't do is underpay people every day and then promise them something really big is going to happen in 30 years. It just doesn't work. So we look at the total package. We look at benefits, incentives, and help the companies set up systems that sort of right-size compensation and connect that to their ownership kind of mindset. What am I missing? Anything else that we do in terms of ownership culture? Coaching management, sort of just all of the things that make a job good on the daily, as well as information sharing, as well as then driving value. And it makes it sound so easy and so tidy when I present it like that. And it's actually, it's not. People are messy, businesses are messy. But again, it's totally doable. We've borrowed a lot of best practices from existing companies, from existing systems, and just sort of figuring it out. If anybody wants to nerd out on ownership culture with me after this, I welcome the opportunity, always learning.
Only thing I'll real quick is that those tools, like you said, a lot of those tools are best practices that can be used in any business, employee-owned or not, but there's something special that happens when you partner ownership culture with real ownership. Yeah. Those two things together, Melissa, you always say, that's the key.
Right, ownership culture without ownership is just culture. Yeah. So, workers get it, right? They're like, oh, sure, I feel like an owner, but I'm not actually an owner, somebody else making money. So, yeah, ownership culture for reals. And then I guess one last thing that I do want to note is we measure that. we set targets with the company. We do a baseline survey of all employees about job quality, ownership mindset, and health and well-being. And then we measure every year after that. We help them set targets for where they want to go with that stuff. We do a systems audit of the business, looking at all of their systems for information sharing, tech, HR, finance, meeting culture, all of that, and measure it every year and share it back with leadership. Leadership uses it to sort of set their ownership culture goals, and then we also share it at a sort of abbreviated level with employees so they can see sort of themselves in the mirror. Here's how we are as a company, and here's where we're trying to get.
Just one point to go with this. Todd, you made a really important point, which was like, these are best practices for any great business, right? And years ago, like 15, 18 years ago, we did a transaction a long time ago, and it's a very successful ESOP company today, and the owner said something that's always stayed with me forever. And he said his aha moment was like the second year. So as a participant in a plan, traditionally, the second year is really important. You get your second participant statement, and why is that really important? It's because your stock value changed. The first one has $10 a share. You go, great, I don't have anything to comp that against. The second one, it's 16. And he said the most important day of ESOP for him was a employee raised their hand and voluntarily asked why. And that's the catalyst for all of that change and that engagement, and all of that is when an employee says why, you're like, oh, I'm so glad you asked, right? Let me take you through it.
Great, thank you. And I know we're almost at time. I think we've got time for one more of these questions. And we've been talking about the US opportunity, right? ESOP is a US structure, there are tax benefits, and there's a tremendous opportunity here in the US. This is a global audience, this is a global conference, and so we had questions around the international opportunity. So curious if you all have a perspective, or perhaps folks have reached out to you around what are some of the key lessons, how can this be replicated into other countries and regions? There was a specific question about Latin America, but would love to hear any insights around employee ownership as a concept and as an opportunity outside the US.
Very hard to do that with the time we have remaining, but I've done lots and lots of work internationally with taking ESOPs international, and there's only a couple of companies in the US that have really done that effectively. And there's a few countries that have ESOP-like statutes, so Canada, Australia, a couple of European countries. And then outside of that, you're really trying to mimic a benefit in another place. And you're trying to bring the employees into that. If you're talking about a US company trying to take its ESOP abroad, which is the work that I've been involved in, but it works. I mean, we have we also have an investment bank that represents companies, and we have many clients that have extended it far beyond the US borders into, we have one client that has it in like 30 or 40 countries, literally, the benefits. But it's hard, and it's wonky, and you gotta go through tax and employment law, all these things in every single country. But universally loved by everybody. Like, nobody ever doesn't like it.
And I'll say, I think to flip the question a little bit, I think there's often, what can we learn from other parts of the world? We are not the leader in worker ownership I'd say in most senses of the word. And you said there are places across the globe that have either elements of worker ownership or true worker ownership. I think about the UK and the John Lewis Trust, which is now kind of being kind of translated over here with the EOTs. If you don't know, Common Trust and Zoe Slag and that team, excellent team, bringing that over here. But if you take it out of the context of ESOP, which is a very specific legal structure in the US, and you brought it out to worker ownership, and you start to think about co-ops, and the depth of the co-op ecosystem in parts of Latin America, of that same sort of ecosystem in parts of East and West Africa and around the world. I think we as a country, if you think about even Germany and where you have to put a worker on the board if the company is a certain size, that's something we do on all of our companies, but it's not required across the US. So I think there's also what can we look out, what can we take from the rest of the world and bring here, because we're not the leader, but we can be and we should be.
Amazing. So not only is there a $10 trillion opportunity here in the US, but there is a multi-trillion-dollar opportunity internationally as well.